Simon. Hello, Lendo. How are you? Barry, everybody. Hope everyone had a good turnaround Tuesday. Good day, FX Glenn. You have a nice turnaround Tuesday. Hi, BW, my trading warrior brother. Okay, good. So just a quick update. How are you, buddy? Turnaround Tuesday, talked about it in the Euro. This candle, it was good for about 50, maybe 60, depending upon what you did. What it does from here could still continue, or I could also see it spiking up again for a 3, but that worked out. USD CAD actually talked about it on the candle that created the divergence down here. This candle, low was 81 about, so it's about 40 pips above. Looks like it's trying. We could get a squeeze here if crude comes off, dollar pops. But either way, anytime turnaround Tuesday that I call out is working in your favor, 30, 40, 50 pips, you have to go the door, especially if it's a scalp. Are we all in agreement on that? Hi, Zig. Kiss, kiss to you too. People might think we're going to have a bromance here, but okay. So the only somewhat clogger was the guppy. It failed. You got a little bit of a pullback, and it's still grinding up here. This could be it, but I know, Steve, I hear you in the background, but something I did notice yesterday, this is something face member Rudy Marin talked to us about last week. He called the high. It was in Aussie yen. It was up here. And that looks to me like we have a failing rally here. So we could be on the verge of having something like this.
Thank you for reminding me. We're going to have a look at this pair later.
Aussie yen?
Yeah.
Okay. You could take it, buddy. I just, there's nothing glaring at me from what I saw yesterday. So, you know.
Oh, you know, and I'm here too. I'm going to be here for the next 20, 30 minutes or so too.
Okay.
Take over then.
So why don't you go ahead, Blake, and
no, I didn't want to take over. I was just saying I was going to be here. I'm just kidding. You know, well, here's
a coup d'etat, buddy.
It's okay. So first of all, we have the Fed. You know, the Fed statement is today, and it's like it is the big deal today. Obviously, the markets. If you look at the, you know, you got the S&P at highs. You got the Nasdaq rallying back to yesterday's highs, spike highs, and we're actually right back to the all-time highs in the Nasdaq as well. The markets are really they're taking the stance that the Fed's not going to they're not going to do anything. We all know that, but they're not going to make any announcements on adjusting balance sheet or even leading up to it. But the risk is in the market that the statement is a little bit more hawkish, meaning that they are looking to consider reducing or bringing down the balance sheet. And if that happens, then you're going to see the stock market probably come back under pressure later today. But we got to wait for the FOMC. Interesting thing is the dollar is not acting as such. The dollar, you would think, well, if the Fed's just going to continue to be or if the Fed's just going to be as dovish as they're going to be, then the euro would be trading at highs and the pound would be at 131, and you know, the dollar would be under a lot more pressure. But the dollar is actually holding up pretty well. You know, the dollar's considering that it's FOMC day. I think people are going to be looking to really you know, establish positions based on what the Fed says and what the Fed does today. You know, and this is, and I have to go back over to the NASDAQ. This marks the 13th, pretty much the 13th day, up day in the NASDAQ. You know, I shorted the Nasdaq yesterday, but I'm taking a longer term stance. It's not a huge position. I short it personally, and we are. I just think that after, you know, so many days, we're probably going to let a little bit of this air out, and the Fed could very easily do that today with being a little bit more hawkish than we'd expect. Now, there is something that's big that's happening tonight as far as the stock market goes. Facebook also announces earnings, so if, you know, the Fed's a little bit more hawkish, or we have them talk about the reducing the balance sheet a little bit, and then if you have like a Facebook miss tonight, you're going to probably see stocks come under a little bit of pressure, I would assume. But that's, you know, that's kind of what I'm looking at as far as equities go. As far as the dollar goes, so even on Bloomberg last night, when I say Bloomberg, I'm talking about the Bloomberg terminals and all the traders that talk amongst Bloomberg. They noted the same thing that we noted on ForexAnalytix. So if you go over to ForexAnalytix and you just look at the, well, actually candlestick analysis, you'll note that yesterday we posted a hammer candle in the dollar. Okay, that is a near-term bullish sign. Now, a couple of things that I want to talk about as far as the dollar goes is you'll also note that we're below channel support, but also we probed some previous support over here and made a false breakdown, if you will, and today, if the dollar ends up on the highs today, and this would have to be a hawkish FOMC, you know, so you have to think about how exactly you want to play that, and frankly, I don't know. I think if I was to play the dollar long, it's going to be against I don't know, against the euro. It'd probably be against the Swedish krona, the Norwegian krona, maybe the Canadian. Well, I'm already long the dollar Canadian, but more dollar Canadian. I don't know if I'd be buying the dollar yen per se. I'd probably short the Kiwi. You know, there's a few things that I would do if the dollar is going to be bullish. Unfortunately, I'm going to be leaving shortly after the FOMC decision to go to a baseball game today. My buddy got some good tickets at the Diamondbacks game, and I haven't seen my friends in about a month's time. So I'm going to leave a little early to tackle that today. But I will still be around for the FOMC. I mean, I'll be in front of my computer at least for, you know, the hour following, and I'll be mobile too. So I'll be watching the dollar carefully, because if the dollar does show some strength by the end of the day, I think we have the genetic makeup, if you will, for a dollar bounce, and we also have the makeup for an equity market pullback as well. So, you know, I'm prepared to take action today, but I want to see, you know, we all want to see what the Fed has in store. You know, the Fed, and don't forget, the Fed has been pretty hawkish over the course of the last year. Now, you might you know, think of Janet Yellen's you know, comments and whatnot about, you know, the lack of inflation, but their actions have been very hawkish. So for them to abruptly stop the route that they've been taking and basically shelving the idea that the Fed is going to raise rates at all, you know, going into the end of the year, you know, where most people feel, and Stelios may have a better handle on this, but, you know, most feel that if the Fed's going to raise, they're going to raise in December. But if they are starting to, you know, taper their bond purchases and they're starting to reduce their balance sheet, and they want to do that as quick as possible, especially while stocks are at all-time highs, which is an opportunity for them to do so. They could be, their statement could be a little bit more hawkish today, alluding to that. And if that's the case, the dollar could get a favorable near-term bounce. You know, is the dollar, is this the bottom for the dollar? I don't know. I don't think it is, and I actually think we are still going towards 92, as I've been, discussing, maybe even as low as 90. But that doesn't mean we're going to do it in one fell swoop either. And relative strength is very, very oversold with the dollar. So the dollar is ripe for some sort of corrective bounce. Again,
like,
I don't.
Like if you draw a line off the low that you have in September and the low that you have in May, that's kind of an objective longer term I'm looking for. So it's a little bit of a down slanting line. The low in September, just it went underneath your dashed dotted line, the low.
Something like this.
The low in September.
The low in September, which is, this is the low in September right here.
Right. So off that tail, and then off the tail of the low in May, it's kind of like a minor downtrend line off those 2 points on the chart.
Something like this. Well,
no, it's all right. No,
you can show it a little bit later.
Okay.
If we do get a bounce, I would agree with you. Generally speaking, if we get a bounce, it's going to look something like this. It's not going to be much more than that.
Yeah.
If I had to guess, but well, if we're going to get a bounce, it would look something like this. There's I was reading some comments from Mark Chandler as well yesterday, how he talked about the or this morning actually, I was reading Mark Chandler's piece. And for those of you that don't, I do recommend that you do. Mark Chandler is probably, he may not always be right, nor are any of us. I mean, he'd been pretty bullish the dollar this year, and obviously he's been wrong in his assessment, but technically he has a great eye, and bigger picture, he has also a very good sense of smell when it comes to the markets, and I truly respect what he has to say. Like I said, regardless whether he's right or wrong, because I'm not always right either, and I'm very well aware of that. So, but he'd talked about overnight that there's a possible false breakout. I don't know if there's a false breakout up here, but I will tell you that we found some pretty good resistance up here at these highs, and I'm not shorting the euro per se right now, but if the Fed's hawkish, this could give you a stopping point for any euro shorts. Now, again, I have to take a step back and reiterate that the Fed is probably close to their cycle end as far as raising rates, whether it's now or it's later on this year. This rate hike cycle is probably close to being over, where other central banks are just getting started. So the longer term prospects for the dollar at this point in time, I don't think look good. So even if the euro does pull back, like let's say to 114 or let's say to 113, which I think is entirely doable, do I think that that's going to be a good area to be on the long side of the euro? Yes, I do, personally. So I think that any bounce in the dollar, this is going along the same lines of what I was just here. Let me grab a pen really quick. Just talking to you guys about any bounce in the dollar or pullback in the euro is probably going to be bought somewhere down there. So I wouldn't expect too much out of this. I don't think you're seeing a long-term reversal, if you will, of the dollar. We don't see any signs of that. I don't see any signs of that. But again, I think that the dollar is ripe for a bounce, and we have to be on the lookout for one. Whether we get it today or not is to be seen. I think there's a lot of pairs that would be bounce worthy, and some of them, like we don't follow on ForexAnalytix, not yet, but we'll be talking about that next week or the next couple of days, I'm sure. But if you look at like the US dollar Norwegian krona, I mean, this thing, it has been really just, you know, very trading very heavy, but relative strength is very divergent here. And
the third wave lower, Blake.
Yeah, well, is the third wave complete?
Should be soon, if not already.
Yeah,
but that
I mean,
means that there is probably more downside afterwards.
Yeah, again, and it goes along with the same analysis that I'm speaking of as the dollar. If the dollar is indeed oversold and we're due for a bounce, the corrective bounce may not be very big, and yes, we're probably going to continue lower, and that could be the same could be said for the US dollar Norwegian krona. I sure as fudgesicles wouldn't be selling the US dollar Norwegian. Yeah, I said fudgesicles. I wouldn't be selling it down here. You'd be crazy to sell down here.
Agreed. Completely agreed.
Are you more of a fan of Turnaround Tuesday after yesterday, Blake? I know you said you were a fan. No, you're not.
No, not for. I mean, Tuesday. Okay, the reason why Turnaround Tuesday is because you have Mutual Fund Monday. So the Mutual Fund Monday is, you know, you got everybody putting their money back to work over the weekend. Nothing bad happened. Let's plow more money back into the stock market. Mutual funds get to work. Mutual funds start allocating, and then on Tuesday, you get a real big move on Monday, and then Tuesday, Wednesday, Thursday, you know, usually it's like, you know, if you look at
I never knew that was the cause.
Yeah. If you look at it's interesting. I've seen charts on it, and I don't know where one is right off the top of my head. But if you look at a chart of the gains that the stock market makes, and you put it, you categorize it into days. Monday is the day where the majority of the money is made in the stock market on the long side. So it was made on Monday. Cool. So, hey, one of the guys in the private chat room, I say private because it's just really just friends are in there. It's not a paid chat room that I'm in. Was just talking about bonds. She was just talking about bonds, and take a look at the bond market. And if you do use ForexAnalytix, you did get this chart a little earlier today. Here's the bear flag pattern on intraday, and here's your like flag pattern. What it looks like. We're at the lower end of the flag pattern right here. So the bond market looks bearish. And now think about that. If the Fed is hawkish, they want to reduce the balance sheet a little bit. Bonds are going to sell off. Yields are going to rally. Stocks are probably going to sell off too. And if yields rally, the dollar is probably going to rally alongside it. So just a little food for thought there. And if bonds go down and yields go up, typically emerging market currencies get hit, commodity currencies get hit too as yields go higher. So, you know, the Aussie is going to underperform, Kiwi is going to underperform, Norwegian krona is going to underperform, peso is going to underperform, Turkish lira is going to underperform, the South African rand, the Canadian currency will probably underperform. So those are things that you should think about in the event that bonds continue lower, and bonds don't look good. I mean, you look at here's a 4-hour chart. We turned from a 618 retracement, okay, and we stalled there Thursday, Friday, okay, stalled right at the 618 retracement to a T. We've sold off to the 618 retracement, but now we're just setting up a bear flag pattern, which, you know, if bonds are truly longer term forging some major highs here, and then we're heading lower in the bond market, you know, yields are going up, and if yields go up, emerging market currencies are probably going to take a dookie.
Maybe it doesn't matter what the Fed is doing, that the bond vigilantes are back. And, you know, maybe there's a correlation that a weak dollar also lends towards a weak bond market and higher yields to stop some of the money flow out of the dollar. That's what a lot of, you know, you have to pay people more to hold a depreciating currency.
Yeah, right, right.
And you know what, Blake? I think your next pattern in play is at your target.
No, it's 18.
Oh, okay.
I'm looking for 18. It stopped where it should stop initially. The U.S. dollar Mexican peso stopped yesterday at 1780.
Yeah.
Right here.
Looks like it wants to come out of here.
Well, we'll see about that. But I'm expecting a move back up towards 18, and then, you know, to continue this channel lower. You know, obviously above 18, and then it's really game on for dollar Mexico long.
You recommend to subscribers, I know it's not in the letter, but you know, you were getting long pretty close near the lows at 17.5, that after they have kind of a lead like this, to at least perhaps trail their stops to BE and take all the heat out of the trade, or maybe even a profit stop.
Yeah, like for me, you know, I own all mine down here because I bought some up in the 60s. So like my stop is below 66. I mean, we get below 66, and I'm going to have to get out. But
you still make money.
Yeah, a little bit. But I'm really, you know, hoping for a move above these highs, and then we get to 18. It's what I'm ultimately hoping for. You know, but things have to. A lot of stars have to align in order for that to happen, and that's the thing about trading is, you know, to go in there and blindly say, all right, I'm buying here, I'm selling here, and then just walk away from it. It's crazy. You've got to think, what are the reasons why it's moving higher, moving lower? You know, where is you know, what are the catalysts that can continue to drive it in the direction that I'm going, and what could actually reverse it? And you know, do I have to be careful of that? I mean, you know, technically, like here's a good example. I was long gold, and there's a pattern in play. Let's see here.
So the pattern in plays are more of a general guideline. They're pretty much in cement for entries and invalidation levels, but when the pattern in play is evolving and working, it's up to the subscribers to manage the trade in the way they most feel comfortable managing the trade.
Right. So exactly. I mean, there's a pattern in play that I put on for gold. It was a great example because gold actually completed its pattern in play. It took, you know, another week or so to do it. Where is it? Okay. So we had this inverted head and shoulder pattern here. Right? It was inverted head and shoulder pattern. We got to about, and then there's a neckline. We got to about here, and I took it off because at that time, at that moment, it looked like the dollar was going to bounce, which obviously the dollar didn't bounce. But I was like, okay, well, you know, that's been a decent gain, and you know, I just didn't reinitiate it. But it ended up completing its pattern because it got to 1250. The 1250 was the actual, you know, head and shoulder pattern completion. I think if let me go take a look at that just to make sure that is correct. Target was 1245. 1245. Oh, which was right here, and I think I got out like right here at like 1240. Close at 1239. Yeah, so I closed it, and I personally closed mine too, like right around there too. I think I got out of my personal trade like 1237.50 or 1238, so somewhere around here. But again, you know, it ended up completing fine. It just there was reasons at that moment in time that I decided to pull the, you know, pulled the plug. And so, you know, so you have to make those decisions on the fly sometimes. I hope that made sense. You gotta trade those you know what I always tell people, Dale?
What, buddy?
A pattern or a technical setup is a good roadmap
There you go.
for a move. You don't have to trade the entire pattern. It's not a, you know, if I see like a triangle formation, you know, for example, you know, if I see like a triangle, like, and I'm looking for a, you know, bullish breakout, okay, and the completion is right here on this triangle. I might only play it to right here, but I have a bias that it's eventually going to make it up there. Right. You know what I mean? So that's the best way, in my opinion, to play, you know, patterns in play. Use it as a roadmap. Like, okay, you know, Blake is bullish until we get to here. So even though I'm not long at the moment, I might have just taken, you know, some money off the table. I'm still looking for longs until we reach that target. That's how I play every pattern that I see. Is, oh, you know, hey, the euro dollar, I can't short it yet because it's got an inverted pattern in play right now, and I know it's, at least I'm confident that it's still going to make it up to wherever. So I don't want to short the euro just yet because I know it's still working on a pattern.
Within each pattern play, there could be and are multiple trading opportunities.
Absolutely.
Absolutely. Okay. So I want to really get that point across to subscribers, that, you know, you have to be flexible, find a trading style that suits your personality, and there could be, you know, 4 or 5 entries on the way up to a pip target. So
absolutely, there can be. Hey guys, I'm gonna let you guys handle the open. I'm gonna be back in about 45 minutes. I'm gonna tell you though, if you haven't, or if you have not tried ForexAnalytix, or maybe you tried it before, and, you know, since we've made a lot of new updates in the past, make sure you go to ForexAnalytix and try it for $1. And then once you do that, it's $1, guys. $1.
I offered to break my piggy bank and refund it.
Seriously, it's $1. All right, and
I haven't had to do it yet.
Month to month. But
Piggy is a little nervous. He's sweating here, but I haven't had to use the hammer on him yet.
Once you do that, make sure you go to the App Store and download, you know, the app so you can get everything mobile. Steve, I'm gonna let you take over because okay. I'll be back. I'll be back in about a half an hour or so, since we don't have.
That's not long enough for Steve.
Yeah, I'll be back. I'll be back and talk a little bit after the open.
Okay, great. So thanks. Blake is going to be back with us. We have stages as well, because as I know, we don't have an interview today, right, Dale?
Yes, you know, that's show business. You know, sometimes people get stage fright. It's amazing how someone could have technical difficulties on the day of their interview. I've seen it a few times. Anyway, yeah, but
speaking, some of them, you know, will be almost technical.
You know what? I mean, since I never interviewed Stelios in Lar at FX Street, this is my opportunity to interview him. I've interviewed everyone else on the ForexAnalytix team.
You know, I'm not sure what he wants to tell you about it, but I can tell you one thing for sure. Stelios has had his fair share of interviews, especially lately.
Yeah.
Right,
he likes them.
Yeah, it's okay. I like it.
All right, Doc Severson, I'll be talking to you. All right, go ahead, Ed.
Okay.
You probably don't like being compared to Ed McMahon, do you? I won't do it anymore.
Me, personally, I have no problem at all. Feel free.
All right, buddy.
Honestly, feel free. Okay, let's begin so I don't forget it, because I wanted to show it yesterday and, you know, it slipped off my mind. This is the Aussie yen. When we had seen it up there and we said that this was a very nice evening star formation, which it still is, we said that, yeah, okay, this is a very, very nice trigger, you know, and a very nice move lower. Yeah. But we're still within the ascending channel, and this is still true. So obviously, there is still the risk reward for somebody to say that, okay, this is the bounce, this was the high at 89, let's call it roughly 89.35. You know, I'm going to be short, I'm going to put a stop loss above there. Sure, fine. but I just want to make sure that I clarify that we don't have a technical break yet lower. We had a very nice trigger, but we don't have a technical break lower. I mean, we haven't broken any technical levels that tell us, okay, this is it. The pair has rolled over. That's it. So, another high, in my opinion, is not impossible in any way. Okay. So unless we see this channel break, be very cautious. And another reason I'm saying this is what I'm seeing in the Kiwi yen. We had said that you shouldn't be short here because that was a triangle. We then said that, this starts to look like a consolidation. This may end up being some kind of an ending diagonal, but I don't like the inclination. I would like it to be more steep. We were looking for a correction lower here when we drew this and then a new high. We actually got that. There it is. Personally speaking, I would probably still expect a new high to break above those highs and get everybody long and stop losses triggered. So if I was forced to actually be short or long here in the short term, I repeat, in the short term, I might actually choose to be long. Although, of course, I'm not going to be doing anything, but I would be loving, an opportunity to short new highs after a breakout from this formation. So, taking into account this as well, I'm even more skeptical in the Aussie yen. Okay, so I think we need to be more patient. I also need to say that we do have some, very clean RSI divergence here. So, it isn't impossible that we're going to see a move lower from where we are. But I give it a higher possibility of another high and then a move lower, okay? By the way, Aussie yen and Kiwi yen, ladies and gents, are going to be covered by ForexAnalytix. They're going to be included along with other pairs starting the upcoming Monday. Okay, so that's that about those. Now, having to do about viewing stocks, nothing has changed. I'm still expecting higher prices. I would still like to see a push to 5,990 in the Nasdaq. The equivalent level for the SPX in my mind is 2,490. I think those are going then to give some shorting opportunities. We've said it before, we hit another low on the VIX yesterday. Obviously, it's oversold, but as we said, going years back in 2006 was an equivalent low, and as we know, stocks kept rallying for months. So VIX is not an indicator that times reversals. It's just an indicator that tells us, especially when you see a situation like this, that tells us that the market is becoming more and more complacent to the possibility of a reversal. And usually that is another signal that you are closer to a high, than you were at to a bottom or whatever. I mean, we're getting close to a high, but what does getting close to a high means? It might even be months, okay? So you need a lot more triggers. So, okay, this is one more thing that aligns along with other things. I mean, there are a lot of indicators that tells us that the market is extremely frothy at current levels, and even this is going to be a bonus before we go.
Jeff Cooper said 2480. We tagged it again today.
Okay, I have an ideal target of 90, but you know something, as we've said, these are technical indications.
You don't have a Gann wheel, buddy. You don't have
exactly.
One of those esoteric wheels.
Exactly. And before I start going through questions that we have, prop shops, since you don't have a guest today, you can discuss prop shops, the do's and don'ts, personal experiences, best practices, worst practices, asking for a friend. That's from Bill. Okay. Good morning, Stelios. Update on the Bund conversation. Thinking this correction was actually a bear flag. I agree with you. Break below 160.150 confirms and points to at least 159.50. That's my target as well, Luca. And you're showing us a chart as well. I'm not going to show it now because I'm going to go to the Bund later, because I have a little bit of an extra before we go back to the FX. And I know that you haven't gotten used to seeing seeing me talk about stocks, but I'm going to do that. Since we're talking about NASDAQ, we have to talk a little bit about the FANGs, okay? The usual Facebook, Netflix, Google, etc., etc., etc. So, you know, I wanted us to have a look at the FANGs. And let's start by Google. First of all, the vast majority of, you know, the leading stocks in the NASDAQ have had overthrows in some very bullish formations. So, for example, Google has had a serious overthrow of this ascending wedge and is now in a range, perhaps have a double top, because as you see, we had a very nasty gap down yesterday. Okay. The only thing that troubles me about a bearish interpretation is that we had a perfect ABC correction here, almost perfect ABC correction, but that has to do with Google. Now, having to do with Facebook, look at this. Facebook, in essence, just, you know, a little bit after the IPO, has been trading in a steep ascending perfect channel, and we've had an overthrow above it as well. In my personal opinion, overthrows in such formations are usually signs that you are in the last part, you know, of a bull market, and not that, you know, because, you know, the alternative is what? Is that after an uptrend that took us, I'm talking now only about the channel, that took us from $20 to $166 to $160 while we were in the channel, you will now have an acceleration and an even steeper ascent from that point on. That's simply nuts, because this can happen for a short period of time, but it's going to be unsustainable. So my point is that I'm already seeing a lot of mark, and look at this, by the way, as well. Okay, so my point is that we're seeing a lot of like mania kind of moves that are definitely only sustainable in a very, very short term. Let's have a look at Amazon. Look at Amazon. Another ascending wedge. Okay, a perfect formation to see a top. And we've had an overthrow at this as well, although the RSI divergence is quite clear here. Okay.
And you know, Nick over a month ago,
she said about 1,440, 1,040, sorry, 1,040.
1050.
There we are. Yeah, here we are at the moment. Yes. So another overthrow in Amazon. Let's have a look at Netflix. I don't remember the exact NFXL yet. Let's have a look at Netflix. Look at this.
Wait.
Let me zoom out.
What a blow off.
Yeah.
So these
what
are
a
all
blow off. Not only that.
Blow-offs. Yeah.
Not only that. We were in this very nice triangle. Yeah. I'm not calling it a wedge because it's, you know, since like ever. So we were in this very nice triangle. We also had the parallel of this line that had acted as support, resistance, 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 resistance. We also found a high at the 161.8 of this move here. We had an ABC correction lower, another move higher, and boom, another blow off.
Could these all be fives, these blow offs to new highs?
Sorry, say again?
Could these all be wave fives?
I'm going to have a discussion with Grega because I don't have the time to start doing, you know, Elliott wave analysis on stocks as well. Okay. But, you know, I'm going to have a discussion with him because perhaps he has already done some of them. But I can tell you from a purely technical perspective, I can tell you one thing for sure. These moves that are currently trapping people in the last phase of a mania, like, oh my God, look at it, it's unstoppable. We're in this kind of a phase. It's unstoppable, etc., etc., etc. Is something.
Emblematic.
Yeah, is something
Like that word.
that you're usually seeing at the very end of a cycle. Okay.
Yeah.
So people that are long should be mostly worried by these kind of moves than anything else, in my opinion. And since I know it's very popular, I also had a look at Tesla, and Tesla, I have to tell you, doesn't look good at all.
No.
Why it doesn't look good? Because it was in a channel. It had a move lower, which seems to be impulsive. I mean, look at it.
Yeah.
And now it's in some kind of a pennant.
Yeah.
It's testing at 50%. It might even retest the 61.8, but
that's your best short candidate. It's already broken.
From those, yes, I think Tesla doesn't look good. Technically speaking, it doesn't. I mean, this looks to me like a correction. It's even if let's make an extension as well. Let's have a look at it. If this is
I think it peaked the day I showed that, I don't know, Datsun that you were going to buy, or
yeah, this is an ABC as well. If you see the correction higher.
I like that.
Sorry, what?
I think it peaked, Tesla peaked that day. You showed that Datsun.
The Mazda, yeah.
Oh, Mazda, yes.
Yeah.
You turned it, man.
But by the way, I honestly believe very much in Tesla as a company. I think it's going to do great. That does not change the fact. I think they have admitted it themselves that current valuations are stupid, regardless.
Yeah, I'll buy it at 100.
Sure, I'm with you. Okay, so that was a little sideshow having to do with stocks.
Euro Aussie, someone's asking.
Yes, I know. I know that we have a euro.
All right, I'll see you in 15 minutes.
USD CAD okay, that question goes to Blake. If he would hold USD CAD into FOMC, he can only answer that. But from what I understood in the way he said it, yes, he would. I mean, he intends to. That's how I understand it. Now let's have a look at what Luca is showing us about the Bund. Blake already spoke about the Bund, and I'm of the same opinion. Okay, this is what you're seeing in a short term.
How you doing, Luca?
In a 1 hour chart as a bear flag. I agree with you. We can go ahead and have a look at the daily of the Bund before we go to the Euro Aussie. There it is.
Hi, Armand Shine.
Okay. Obviously, yesterday's candle is a huge candle, and this formation is an evening star formation. So honestly speaking, any rebound that wouldn't exceed, let's say, roughly 162, 162.10 is sellable. End of story. So speaking about bear flags, it's not only a short-term bear flag we can talk about, Luca. This was a bear flag on its own here. Wait, let me take the magnet off. So this is the bear flag that you're talking about of a bear flag, okay? So this is what it is, roughly speaking. So yes, there is no question in my mind. This thing is bearish at the moment. I mean, a break below here will do this, what we drew a few days ago. We'll do this, okay? So yeah, I'm totally with you. And I'm short, as I said, since yesterday. Okay, Blake already showed the ZN specifically, to be honest, okay? He did show this, and he did show a short-term chart. There is no question that this move now has to be considered corrective. Yesterday's, I mean, the rejection from the 61.8, which was here, and the move we saw the day before yesterday, accelerating yesterday, same situation. Yes, I think looking to the downside in the two benchmark bonds is a good idea. Let's have a look at Euro Aussie though. Okay, nothing much in the Euro Aussie yet. As we said, as long as we rebounded from a perfect ABC here, there is even the opportunity to see new highs. Okay, and I'm still a believer in that. But you know, you need to be nimble because this might be a more complicated technical formation. So there is the risk reward to be long against the lows. There is no question about it. And there is even, you know, a technical basis to believe that new highs are coming. But it is a trade that is, you know, let's say a 50-50 trade. What makes it interesting is the fact that the risk reward is still there. Okay, so indications that we found a low here, yes. This was a horizontal support zone. This was an ABC. This move higher looked impulsive to me. At least one more high, in my opinion, is a high possibility. So I still like it to the upside in a longer term view. And I think we also had a look at the Euro Kiwi, which we said is, you know, more mixed. We currently seem to be in some kind of a triangle here. You know, this is a very choppy consolidation, which sooner or later is going to break one way or the other, obviously. So, you know, we need to see what's going to happen here, because sooner or later, you know, we're going to have some resolution in this as well, and we can discuss about it afterwards. But, you know, currently it's, you know, very choppy. EuroCAD, people are asking, again, nothing has changed here. This can prove another consolidation that will produce another push lower. To be honest, as a bullish move, it's definitely completely uninspiring. So I still believe that you know, we might get one push lower, which also coincides with what I've said many times about the USD CAD, that I believe that the USD CAD, even if it sees some short-term relief, that's going to be a bull trap that's going to bring us to new lows. Okay. And we're not even sure if that short-term relief is going to come from exactly here. I mean, it might even come from a little bit lower than here. But this structure is incomplete in my mind. I mean, for a bearish move, it's incomplete. USD NOK. USD NOK is about the same situation. I remain bearish because I believe that this move is incomplete as well. We might get a bounce at some point. It might be coming from here, sure. But I believe that that move is going to be sold again. And the fact that we have now spent already a couple of days below the 8 level is a huge, huge event in my mind. Of course, every such a move can prove to be a bear trap, but I don't think so. I don't think so. I think this is incomplete. I see a 1, a 2, a 3, a 4, a 5. Even if you see here, we have a 1, 2, 3, 4, 5, then a bigger 4, then a 5. I don't know. I think that actually this thing is actually breaking. I mean, and it is going to see lower prices. And to be honest, for a very good reason. For a very good reason. For a very good reason. From a fundamental perspective as well, I mean. Not from a technical perspective only. Euro NOK.
What is that reason?
We made a whole blog post about it some time ago.
Yes, we did.
Yeah,
so go ahead.
No, but you know, there's a lot of things. You know, people know me. I'm a big fan of Norway overall. You know, their well-run country. Obviously, they depend on oil quite a bit. About 20% of GDP, I think, is oil and gas. But very well-run. They've got to have a huge sovereign wealth fund, very low unemployment. I actually have friends who live in Norway, and they always tell me, high taxes, but things really work. So, as a country, they're very prudent and they're very well run. Their central bank is a little bit too prudent sometimes, and also it's like a common secret that they go into the markets and they sell kroner and they buy euros at certain levels. But still, overall, as a country, the way it's run and its fundamentals, really solid. And the fact that it's happened to be sitting on oil as well, I don't get why that has to be a disadvantage. It's not like it's 90% of their exports. It's a good chunk, but it's not everything. So personally,
low unemployment, low unemployment, rather high inflation.
Yeah.
So under normal circumstances, somebody would be looking for the Norges Bank to actually go through a hiking cycle, right, Stelio?
Yeah, they should. Theoretically, given the economic data out of the country, they should be already
let me state it oppositely. Other people are hiking with worse
we're talking
macro
about
data.
hiking. Yeah, exactly. We're talking about hiking. And the other thing with Norway is that during the financial crisis, their economy obviously suffered a little bit, but they, you didn't see these extremes of other countries. So they're very stable, and like Steve said, very low unemployment, $135,000 I think per capita of in their sovereign wealth fund. They're a very well-run country overall.
Yes, and one of the few countries that has a huge piggy bank, as Stelio said, for the rainy days. Actually, the Norwegian sovereign wealth fund owns almost like 2% of global stocks.
Of everything, yeah.
Of everything.
Yeah.
Of everything, yes.
And they're very well diversified.
Let's not forget what great skiers they are.
Yeah, but they're also very well diversified. They own property, outside. Obviously, they have a big property portfolio. They own stocks. They have oil. They're doing, I think, everything that a prudent central bank and then government would do. In my opinion.
It's like a hedge fund.
Yeah, a well-run hedge fund.
A well-run one. Yes, exactly. So yeah, for a very good reason. It was a move that was in my mind overdue. The breakdown in the USD NOK actually. Having to do, another friend is asking about what happens from this point on with USD yen. Things are quite simple actually. This was a morning star formation. Okay. This is a bullish pattern. Those three candles, 1, 2, 3, a perfect morning star formation. This point's higher. Now, until we close above 112, you never know. But the thing is that with seeing these kind of moves, the situation with the USD yen has become more complicated. So there is a good chance that we're now in a triangle, which means that even a move and the close above 112, I'm unconvinced now that it's going to lead to new highs immediately, because it might give us, first of all, if we fail from here, we should retest this level before even, looking for a pullback. Now, on the other hand, if we continue higher from here, I would still be very skeptical, because what might happen might be something like this. Okay. So what I'm trying to say is that sometimes, I also wrote it in analysis yesterday because I was doing the USD yen, and I actually wrote it yesterday about a couple of pairs, and it's absolutely okay to be of that position. Listen, there are some currency pairs at the moment that need a little bit of patience, because the technicals are, mixed. We seem to be in a larger consolidation, and when that happens, you just start monitoring and you wait for clarity. Otherwise, you're going to be chopped up. Okay, so telling you in exactly the middle of a possible triangle range, buy or sell here, doesn't make much sense. I can tell you that 112 is a resistance level. So if you see a rejection today, then perhaps you can say, okay, perhaps I can be short against, today's high, for example. But, we're in the middle of a possible triangle, so not much to do here in the medium term. We need to wait for more clarity. Okay, if we saw a rebound from 112 and a push higher, then I would still be a believer that this would continue as an impulsive move, to perhaps even new highs. But after breaking below it, I'm not so convinced yet. Okay, so just wait a little bit longer and we'll get a better confirmation of what's happening. Dow hitting upper daily trend line from June and July and looks like several 5 fins here, Simon says. Simon says sounds a little bit fun. It's like, isn't that a game like Simon says in the US?
Yes, it is. Yes.
Yeah, okay.
In the UK it is. I don't know about the US, but I'm sure it's in the UK.
Okay, Simon, I have to tell you the following. First of all, I have to tell you that I agree. Second of all, I have to tell you that the trend line you're looking at is way more important than you've noticed, because this is what I see in the Dow. This was a very nice channel. We had an underthrow here, if that's even a valid term, but you know what I mean. We've tested it several times. We're retesting it once again, as you see. Okay. And I agree with you. This can easily be, as you see here, this can easily be a 1, 2, a 3, a 4, a 5, a 1, 2, 3, 4, 5, then of an extended third. And that would give us a 4th before a 5th, something like that. So yes, I'm with you. Dow also shows us that a near-term top like the Nasdaq and the SPX might be close. Okay. So yes, I'm in agreement with you. Let's have a look since we're here at IWM as well. Look at this as well. This is also the Russell. Okay. Look at this. It's also at resistance at the moment.
Yeah, he hasn't had a throw over yet.
Yes. Correct.
Maybe not. Maybe it doesn't. They only won.
Okay, so there's no question. Being long at these levels is nuts. I do believe we're going to see new highs, but I do believe that the pullback is, just around the corner. Okay, let's see. We have more questions. Aussie USD. Okay, sure. And 2 people actually asking for Aussie USD. Let me see if I've missed anything. Okay, Aussie USD, let's go. Actually, let's have a look at both the Aussie and the Kiwi. Okay, since we're here. Okay, what troubles me about the Aussie is that I see nothing bearish, simply because this is a triangle. Okay, so there is a chance of a new low down to this point, but I do think that we're going to see at least one more high in the Aussie USD. As simple as that. I mean, I can't make it more specific, but my gut and this little formation here tell me that this is incomplete. This bull leg higher is incomplete. So what I showed here, which instead of a move lower might be like another high, another low, and then another new high, and then a move lower, perhaps to test these levels, the breakout level at 77, 40, 50. That's a very good possibility, and this is what I'm looking at. Kiwis has already done such a thing, but still, I would still consider that perhaps even one more high as well, before lower. So I don't see these patterns being more likely than not they're incomplete at the moment. So probably another high, even from here. So I see another push, either from here or from a little bit lower. I see another push to new highs before being able to say that yes, a deeper correction is going to come now. So I would advise against being short once again, as I've done plenty of times in the past few weeks. Okay, so don't jump the gun, in my opinion. Don't jump the gun yet. Once I see a good opportunity, trust me, I'll be all over it. I've already shorted Kiwi. Here we've talked about it in the webinar. I had already shorted Kiwi. I was, I had good reflexes enough to book like close to 40 pips, 45 pips each time and bailing out. And, it ended up that bailing out was a good thing to do because indeed the consolidations we had were not, initially I thought this was an ascending wedge. Then we saw another formation, whatever it was, I don't even remember anymore because I have removed them. So we took two shorts, and it was obvious after a few days that they wouldn't be working because the pair was very good, well bid, and I think it's not ready to roll over yet. So same applies to both of them. The pound, yes, and thank you for reminding me actually because I want to talk about it. Okay, listen, what I see here in the pound is a possible wedge. So if that's the case, I would be expecting, first of all, until we see a clean break below this zone, which would still just point to going back to 128, I cannot simply become bearish the cable. But what I'm seeing here is a wedge that should have at least one more thrust higher. At least. So honestly speaking, if I had to bet if the next move in the cable would be higher or lower, I would put my money to higher. I don't have a position at the moment, and I don't intend to, but I might even go short if I see that one more high that I would ideally want to see, and then like a big reversal candle. Okay, so quite likely one more push to the upside. Now having to do with the euro, we shouldn't open it here, the euro pound. There it is. Okay, the good thing is, as I said that day, I wasn't stopped out. So it seems to be pushing lower once again. So this interpretation might still play out. I'm not very optimistic, I have to say, despite the fact that we held the 0.90 level. Am I convinced that this thing is rolling over from here? No, I'm not, but it has a chance. But if it is to prove that that's the case, I really want to see this move accelerating now. I don't want to see like a few short black candles slowly pushing towards 0.8870, which is this zone that I have here, which is also my entry roughly, because then I will probably bail out at break even and just consider it a good chance that I manage to get out. I want to see acceleration. So if this scenario is to play out, I want to start seeing some bigger candles that will be leading lower. So yeah, the fact that we got rejected up here, okay, it's all good and nice, but what I'm trying to say is that we've already had like 3 daily candles that haven't even retraced like 30–40% of one single candle that we saw there. So we're seeing strong moves to the upside for the time being and like cautious moves to the downside. As I said, I'm not convinced. I want to see something different. But something else I wanted to show, and I warned plenty of weeks ago, is that really things have changed about the euro Swissy. Okay, look at this. Another strong move higher. I remember a friend asked like 3–4 days ago, is it a short? And I said, no, it's not a short. I mean, best case scenario, you're going to see a little pullback to this area, and then I would be looking to be long again. And look at it. I mean, we've clearly seen, you know, a change of things here. And this is not the S&P doing this. This is not the S&P. This is actual market bid. I do believe this. Okay, Greece issued a bond for the first time after years, after 3 years. Things in the Eurozone have calmed down. Political risk has receded. I mean, it makes sense that people do not want to hold the Swiss franc. I mean, if I'm not mistaken, Stelio, the S&P has the lowest rates, the highest negative rates on the planet at the moment. Am I right on that, mate?
If I'm not mistaken, there are negative 3/4.
Yes,
Yeah,
minus 0.7. If I'm not mistaken.
Did you want to do that macro interview, or just continue?
Yeah, okay, we can talk about whatever you want. There's no problem.
Yeah.
What do you,
So,
are you through, Steve?
Yes, yes, totally. Just to finish up, what I wanted to say here is the following. This is the reason I told you that instead of being if and when you want to be, we had this conversation many days ago. If and when you want to be short the Euro USD, because of the move we see in the Euro Swiss, you would rather be long the USD Swiss. And a friend asked yesterday, and I don't think I covered this question, this pair found a low at the 2016 low, and this rebound has started looking quite formidable. We had a morning star formation, and today's candle shows some very strong follow through. So, yes,
you remember that Euro blog that we did a few months ago after the French election?
Yes.
The Euro Swiss chart from that it worked to a T. It was actually, I'm sure all the Euro pairs did, but the Euro Swiss was like, and that the sad thing is that thing was on my radar, and I totally let it go. I totally just, can't catch them all, but
that's very true. That's very true. And no regrets. No regrets.
No, but the dollar Swiss does look pretty. I mean, it looks possible that we could get a really strong bounce here. I mean, especially if the
something, Blake. I'm not going to predict what's going to happen with the Euro USD because it's a tough market at the moment. Everybody wants to short it, but it remains very well bid. But what I'm telling to our friends here is that we still don't have a strong reversal signal for the Euro USD. But for sure, are you a believer of a reversal in the Euro USD? You should play it in the USD CHF. There's no question in my mind about it.
Yeah, that's a good I think way to play it, and because you have the interest rate differentials really playing into your into your trade. So
yes, and Euro Swiss has finally broken above multiple levels, and it seems to be getting unstuck from the artificial second floor, the unspoken second floor that the S&P had built after letting the official floor collapse.
Right. So, so Dale, you're going to let Stelios talk a little bit about macro. I'd like to just be here to chime in when possible.
Okay. Yep. So Stelios, why don't you take over the screen, my friend?
Sure. Let me see how I do this.
And what I'd like you to do is, because you're not speaking as much as these webinars, maybe just introduce yourself and talk a little bit about your
name and rank.
Yeah, your name, rank, and serial number.
Yep.
So,
and then what I'd like you to do.
Actually, he was a sergeant, as I was in the.
I was in the armored corps in the Greek army.
In the armored corps, yes.
Wow, they promote anybody over there. Jesus.
Yeah, exactly. Even to Stelios's.
So, since
in the Marine Corps, people have to die to get for me to get promoted. Anyway, go ahead. Sorry.
In the Greek army, you die from boredom, mate. So I don't know if that counts.
Not in the ancient days.
Yeah,
You were
that's very true.
born at the wrong time.
That's very true.
So let me ask you, Stel, you know, you do all the macro for ForexAnalytix. What is the most recent update that you've compiled on a macro instrument, on any instrument? What's your most recent analysis?
Done a few. I mean, I've probably done a few more recently, but I think the one that was the most important for me was the dollar CAD, which was when. Well, I can talk about it in a minute. I'll talk about it in a minute. Let me just start with something a bit more general. First of all, given that you have never interviewed me, and I don't know why, Dale.
And now it's the quad. Now it's you know, before it was the trifecta. I don't know what if you win on pick the first 4 horses in a race, what it's called. But yeah, so this is a big day for me too. Yeah.
So just a very quick word on my background. I used to be an IT man, and then I switched completely into trading, and I was a market maker based in the city of London for a couple of big banks, and I traded interest rate derivatives. So that's my background. Then I came back to Greece a few years ago. I became a PA trader for my own funds and family funds. So it was a big change for me, and my trading style is very macro oriented. So I'm not a day trader, although I do short-term trades on occasion, but overall I tend to look at the big picture. I decide what I like, and then I try to look at the good entry and exit points. So what I do every now and then is I take a step back and I look at the big picture. And as we know, because I trade mostly FX, FX pairs, they're driven by spot and forward interest rate differentials. So what the market is perceiving, you know, central banks are going to do with their rates and etc. So I look at what's happening in the world in the past year and a half, and there's something that's changing in a big way, I think, you know, from the financial crisis. And you see the Fed, like Blake said before, they've already started hiking. They probably regret not taking the opportunity earlier in, when was it? I think 2014, when they, you know, the US had a good string of you know, economic data, but they kind of hesitated. They didn't hike into it, and they were criticized a little bit. So this time, you know, the US is doing okay. They started hiking, but they're now hiking into a slightly weakening economy. You know, they're not firing on all cylinders. So what I think is happening is that they are trying to get out of this zero rate environment. And I think the whole world wants to do that. And that's why you're seeing other central banks slowly following suit, because the Fed can't do everything. They can't pull everybody. You know, it's like the Tour de France. The guy in the front does all the work. He can't be at the front all the time. So they're doing that. And then you have the ECB slowly talking about hikes, eventual hikes, reducing QE. Bank of England are starting as well to, you know, even though we've got this huge uncertainty, Brexit and everything, they're already talking, you know, we've got 3 dissenters wanting to raise rates. And you've got other banks, like the Bank of Canada, who've already hiked. And, you know, so this is something that is slowly happening and slowly changing. So I personally think we are entering a new phase where rates globally are going to start going higher. How much higher is a very good question. Definitely not where they used to be. So I think the new normal is, you know, rates 2 to 3 or 4%. It's probably going to be as good as it gets. So this is what we've got happening. And so now going back to your question, the last, I think, major update I did was the dollar CAD. And actually, I can bring that in here. One second.
So you have the dollar chart up, Stel, before you go to CAD. So I see this huge triangle that you have, and then you have the breakout over par, went to 104. Now it's back inside the formation. What's your macro view on the dollar now that we're back inside this huge triangle? With what you're talking about with central banks, perhaps the Fed tightening with the U.S. economy not being as strong as it was in 2014 could even weaken the economy, therefore vis-a-vis weaken the dollar?
Yeah, it's very possible. I mean, if you remember, around 3 months ago, we were talking about this little breakout in the DXY, and I pointed that out in one of the webinars. I said, look, it's been touched 5 times, and I think it's gonna, if it breaks, it's gonna be a big thing. And this is kind of coinciding with the general small slowdown in the US. The numbers used to be really good about a year ago. Now we're getting a few misses. So okay. I think that the market now, Fed fund futures are still pricing around 35 basis points of hikes until the end of next year, which is, it's not a lot. It's signaling the end of the cycle, really. That's what it's doing. So I think the dollar, if the Fed hikes once more in December, which is what's being priced, and maybe once more again next year, but it's a bit iffy, then the US economy and the dollar might find some stability. It's very hard to have a clean view right here. I had a view earlier, a few months ago, and I said I think dollar's going to weaken a little bit because of what's happened. But it's very difficult, and the market is definitely not going to go into a place where it's going to start pricing cuts or more QE. I don't think that's going to happen. So the downside for the dollar is probably a little bit limited now. And if you look at the chart, we're also reaching a pretty big zone here. So if we do reach 92, 93, that's probably going to be pricing less than a hike until the end of next year, which I think is the base. So it's a tough call. I think the dollar is probably done for now in terms of depreciating. And the other thing which I always say is I've always said this. I used to sit next to the bond traders at the banks where I was working, and my saying was always the bond market's always right and always first to react. And you can see bond markets are starting to break down a little bit. So right. What I was talking about in the beginning about higher rates, I think this is something that's here to stay, and it's probably gonna go a little bit further in terms of absolute rates. So
okay,
yeah, it's the dollar's a tough one. It's always been a tough one, and I think that given the recent run, the last 6 months, I think it's probably gonna find some support around here, and then we'll wait for the next big event.
But Stelios, so let's talk about that a little bit. And I think this is where the market really got wrong-footed at the beginning of the year, when and we saw it here on the webinar. And I want to be very clear that if you've been listening to this webinar for the last several months, you as a trader understand why the dollar strengthened or weakened, excuse me, because you saw the Fed was early. We were early to lower rates. Remember, we were the first ones, when I say we, the Fed was the first ones to lower rates in the financial crisis. We're the first one to normalize. But as we have gotten towards the end of this cycle, now other central banks are, like you pointed out, or you used the analogy of the Tour de France, which by the way is a great one. We're pulling back as other leaders are taking our place as far as raising rates goes. And this has been the big catalyst to drive the dollar lower. Now, I sit here and think, even though I'm playing the dollar slightly on the long side for a bounce, I don't have a reason, a macro reason to really be long the dollar longer term. Like, I can't figure out, and I've wrestled with this for the last 2 weeks. For the last 2 weeks, I've been thinking, okay, I'm going to start buying the dollar soon, but why? I mean, give me a reason why. I mean, is there anything that you can think of other than all I could say is all-out risk aversion? The market. But when's the last time we saw a 5% decline in the stock market? But if we saw a real big 7 to 8 to 10% decline, you could argue that the dollar would be bought as a result of risk aversion. But is there any other reason? Like, I don't know. I mean, you could say, well, how about like, would you say if the U.S. administration was able to actually push some legislation through, maybe would that be a catalyst to drive the dollar higher? I don't know. I'm asking.
I think you said the two possible reasons, actually, and both are possible. But as you very rightly say, will the administration do, do something that's going to push the dollar higher? Well, they're not. They haven't done that much in the first few months. So it's a tough one. But I'll ask you this other question. Okay, if other central banks starts hiking, obviously the dollar is going to weaken against those currencies. But which central bank do you think has enough ammo and capacity to hike comprehensively? Not just do one hike and be done. The ECB, difficult. The Bank of England, again, difficult. They might do one or two. So I don't see one.
China difficult.
Yeah, I mean, the only central bank I think should be hiking aggressively is Norges Bank, and we talked about that before. But the majors like Bank of Japan, no way. So who is going to go there and pick up the baton and do 1% hikes like the US did? I can't think of anybody.
It's true, and I think maybe some of the the Nordic countries and maybe Switzerland coming out of deep negative rates. And you don't have to physically raise rates to raise rates. I mean, the central banks don't have to, like you can see that the market is already tightening for the euro, for the ECB, without them really moving. So
yeah, that's a fair point.
Guys, part of the long-term thesis for most super dollar bulls is they say that most of the global debt is denominated in dollars, and that's what's going to create a move up in the dollar as liquidity begins to dry up. There's going to be more demand for dollars just to service and roll over debt. I was wondering what you guys thought about that.
I don't have any thoughts.
Okay.
That is a good question. I mean, there is. Can you hear me? Yeah.
I mean, it would be easy for them. It'd be less painful to roll debt with a depreciating dollar. It's cheaper to pay it back, right?
Yeah.
Go ahead.
No, I was just going to say, and the inflating debt away is the way that most Western countries have been facing their growing debt, pile for the last decades. So that's what they're doing. They're inflating the debt away. So, it's a tough one. It's really a tough one. I really don't know what to say.
Okay, just threw it out there. I don't completely. I have a hard time wrapping my head around, but basically, they're saying that because of all the debt that's denominated in dollars, there's a natural demand for dollars to service it. So
we haven't seen any natural demand for the dollar, have we?
Not the last few months. No.
Right. Yeah. Right. So the dollar.
In all honesty, we haven't even seen anybody trying to service any kind of debt. Everybody is rolling debt over again and again and again and again. Nobody's repaying that, and that's the problem. That's why we have accumulated.
Well, they pay the interest on the debt. They're servicing it, and we'll see. So they may not be paying down principal, but in order not to default, you have to at least pay the interest.
Of course. There's no question about it. Although, to be honest, Dale, with the interest rates we've had for the last several years, even coupons.
Free money.
Yeah, even coupons. I mean, think about it. Just think about. Stelio, especially at the peak of the bonds, up to which maturity were, for example, German bonds at negative rates? 7 years. What was it?
Wait, hold on. The 10-year went to.
I remember the 10-year went at some point.
Trading at 0.07. I remember we're making James Bond jokes.
Yeah. Exactly. Yes.
10-year was at 0. Yeah.
Yeah.
So yeah, exactly. That's insane. Yeah.
So along this conversation, I know we just have a few more minutes left. Still, what do you make of the bond market? And like, let's say we have a longer term. I mean, in your view, since we're talking about rates and we're talking about rates going higher, that would justify a view that the bond market, especially the U.S. Treasury market and maybe bonds and all treasuries are globally are forging out a longer term top. And we've been in a, I have a friend of mine who is like a senior VP over at Morgan Stanley, and he's like one of the biggest. He's a big bond guy, and he's made his whole career off of being long bonds the last 25 years, basically. And I mean, it's been an amazing bull run. Are we really due for a longer term top and maybe even a trend change in the bond market now that you know, central banks have been in an emergency state for so many years, that we're coming out of that ultra low rate policy, and rates are eventually going to go higher. So how do you feel about the bond market where it's at today?
Well, I have a very clear view on the bond market. I think we have formed the top. It's been the mother of all rallies, this 10-year or 15-year, whatever it's been, bond rally. And I think rates are going higher globally. I don't think, as I said before, we're going to go anywhere near where rates used to be 10, 15, 20 years ago. But I think risk has been underpriced for way too long. Cheap money and search for yield has just produced this, in my opinion, totally artificial pricing of risk when it comes to and in return when it comes to bonds. So I think the top should be in, or I think it's a great risk reward trade to be short bonds, even after this move, the move of the last few weeks. And I really do think that. And on a medium term, if you look at my trade horizon, sometimes is 1, 2, 3, 4 years. I think it's a great trade to be short bonds, because
Martin Armstrong agrees with you, Stel. He's looking for a sovereign debt crisis, basically rolling from Europe to Asia to the U.S. and sovereign debt being the biggest bubble of all. So that's strong.
Yeah, okay. I don't know if it's going to be a sovereign debt crisis, but I do think that things are changing. Like I said before, the whole attitude from central banks and the way things are going, I think we've turned the corner. I may be wrong. I've been wrong many times, but that's what I feel.
Arguably, you could say that this tightening of global monetary conditions and cheap money is eventually going to take its toll on equities. Eventually,
of course.
Yeah. I mean, obviously not today, but it eventually will.
I think it's going to take its toll.
In '87, Blake, it took about 6 months of having a bear market in bonds and the dollar before we had a high in the stock market. And I say this decline is, entering that time frame. They call it disintermediation, and we're definitely doing this. I mean, the low in the 10-year was a few years ago.
Yeah, so, interesting. Some good thoughts, and Stelios, I want to thank you for your thoughts on a macro point of view, and it's always good to hear your voice along with Steve and Dale. I'm gonna be signing out because I've got to get out of here for the crude oil inventories that are coming out in just a couple minutes. But you guys have a great session.
Have a good time at the game, Blake.
Thank you. Thank you.
You know what I forgot to show before we go, Dale.
Oh, we're doing a time change. Sorry.
Yeah. First of all, we need to remind the people that we're doing the time change. Second of all, there was a friend that since the beginning asked for asked you, Blake, actually as well. What do you think of oil?
He's gone. So you take it. You take it.
Okay. I'm taking it because I completely forgot about it. He asked early on.
Yeah, we're almost at next objectives, aren't we? 49, 50.
Not only that.
Yeah.
Not only that, we almost reached, an equality target of an ABC, as you see. The perfect target, we discussed it the other day, was 48.89. Okay, we came very close to it. We also reached the horizontal support resistance zone I had in my charts, and the channel resistance. So, I would be very careful with oil here, very careful. very, very careful. I'm not telling you that, you know, you should be short or whatever, because we have this level to the downside, 47.25, is going to be important. Okay, so unless I see a breach below it, you know, we could see, like, you know, another move higher or whatever, because we don't know what's happening from here. But we had said since the very beginning that 49 is a critical level in crude.
Huge draw, by the way, huge draw, much bigger than expected.
In inventory, Stelio, eh?
Yeah, big draw. So oil positive.
Yeah, oil positive indeed, and that's why we're already seeing a pullback to today's you know, losses. So what I wanted to say is that, you know, I was bullish oil down here. I told you up here that since before we go up here, that when you see the first move lower, do not trust it. It's going to be a bear trap.
You did.
But now it's time for me to tell you that I'm very skeptical up here. I mean, 49 is a very critical level to me. I have a confluence of resistances, so I would not be long anymore. So, you know,
maybe
I know
get
that
a break out of the channel, then wait for it to get back inside the channel for the signal.
Exactly, something like that. I mean,
Yeah.
for me to believe in a larger, that this is the beginning of a larger move of oil higher, I would want to see something like this.
Yeah.
You know what I mean?
Yeah, I do.
Yeah.
I understand you, Steve, in all ways. In all ways.
Thank you. But unless we see this break above here, be very careful. This is not the place to establish longs. In no way. No way. On the other hand, if you're a strong believer, you know, that this is just the beginning of a move higher and not a correction, as I said before, 47.25 is the level for you. So a retest of 47.25, if you see a reaction from there, that's going to be a positive sign. But then I would still have to tell you that 49 will remain a critical level. So, you know, no matter what, I want to see a clean break of 49 to start being longer term positive on the price of crude. Okay.
All right, Steve, Stelios,
Okay.
Blake,
Thank you.
Face. Thank you, everybody. Click the
Thanks,
link
Dale.
in the room for a one-day trial. Great interview, Stel. And you know, we've gotten comments. Go ahead, buddy.
No, I was just going to say it's my pleasure.
We've gotten comments on Twitter and elsewhere. You know, the public really likes when all of us are in here throwing our 2 cents in. It's one of their favorite times of Face, is when there's that interaction of all these, you know, different viewpoints from the team. So, I mean, that was a team effort. So,
Yep.
Very nice. And
We're
I
all
will
gonna
tweet it out there. And in my opinion, what's your Stelios's Twitter handle is what? What is it, Stel?
It's BBKI 2611. Don't ask me why.
Okay, I won't ask you why, but I will say it's great, that Stel is a great follow. So click on his handle and start following Stel. Okay, Volgi, Morrow, Pinkert, we're out of here. Remember, don't just count your pips, count your blessings, and click that trial. In fact, skip the trial, go right to the subscription. And most of all, don't just count your pips, count your blessings. Hope the turnaround Tuesday calls that are still working, that you guys are able to catch a little bit of it anyway. And I do have a guest tomorrow, Sheldon McIntyre, Hertz Capital. He lives in South America. Great technician. So look forward to seeing everyone for Thursday. Adios, my friends, my trading warrior brothers and sisters. Enjoy your summer day.